Can you hear me now? Audible now? Yes. Okay. So we are still in this retirement question, right? Yes, retirement question. So we'll go in this order. So you can see ABC were in partnership sharing profits and losses in the ratio of 3:2:1. The balance sheet of the firm. This is your old profit sharing ratio. I hope you can hear me now. Yes, audible. Okay. So you can see the balance sheet, ABC, capital accounts. Then A on account of ill health gave notice. A is going to retire here. Okay, A is retiring and the profit and loss account for the year ended 31st March 2022 is given, which showed a net profit of 42,000. Okay, they said it has to be reopened. That means bring the net profit back to P&L. Okay, and then you have to give 6,000 bonus to B. 6,000 bonus has to be given to B. So put that bonus. So after the bonus, whatever profit is there, distribute in the new profit sharing ratio. They said that you have to change the profit sharing ratio to 2:3:1. It has to be changed, and whatever 36,000 is there, distribute in the new profit sharing ratio. Okay, goodwill is to be valued at 2 years purchase. So calculate the average profit, multiply it into 2, you'll get the goodwill, distribute it to the retiring partner, give retiring partner share in sacrificing ratio, compute the sacrificing ratio. Fixtures are to be valued at 39,800 and provisions should be made. So 2 revaluation items in your revaluation account. Okay, distribute this profit in the new profit sharing ratio, the new one, not the old one, which is given at the starting of the question. The amount payable to A shall be paid by B. Whatever is payable to A, it will be paid by B. Okay, B and C agreed as between themselves to continue the business sharing profits and losses in the ratio of 3:1. Now, what is this 3:1? After A is gone, B and C will continue the business in the ratio of 3:1. This is their new profit sharing ratio and decided to retain fixtures in the books at the revised value and increase the provision to 6%. Here, can you see they had created provision of 2%? So from 2%, they're increasing the provision to 6%. So extra 4% provision is required. This loss will be borne by B and C. Provision is going to be removed from profits, right? It will be borne by B and C. Total capital of the firm to be valued at 3 lakhs as to be maintained in the new profit sharing ratio. Can you see the new profit sharing ratio is 3:1? This 3 lakh should be in the new profit sharing ratio. So what you're going to do after that, whatever excess or shortfall, it will be borne by C. You're giving effect to necessary entries, above arrangement, prepare capital account and cash account and balance sheet. Why did they ask cash account? Because if there is any shortfall or excess when you are doing this proportionate capital, you have to route it through the cash account. Okay, I hope it is clear. Dissolution of partnership, piecemeal distribution. Okay, guys. I'll try to brief you on dissolution of partnership. A lot of people are asking on dissolution of partnership situation. Okay. So what are they going to do in dissolution? Basically, we have a partnership firm which is going to shut down, and that partnership firm has a balance sheet. This balance sheet has to be emptied. You're going to empty this balance sheet. So what you're going to do first, transfer all assets and liabilities. Whatever assets and liabilities are there, transfer it to realization account. Transfer it to realization account. Okay, at what value? At book value. Except cash because cash might be required for future transactions. So what will you do? Realize asset has to be removed. So asset has to be credited. So you'll pass realization debited to assets account. Realization debited to assets account. And liabilities have to be removed. Liabilities have credit balance. So liability is debited to realization account. Clear? First thing you're going to do this. If any asset is taken over, after this, any asset is taken over by partner. So what will you do? Partner is taking the asset. So partner's capital account debited to realization account. If any liability is paid by partner, liability is paid by the partner. So what will you do? Realization account debited to partner's capital account. Realization account debited to partner's capital account. Clear? Then finally, okay, if there are any realization expenses, some realization expenses are to be paid. So what will you do? Realization account debited to cash account. You have kept the cash account separate, right? Realization account debited to cash account. Okay, finally, in this case, the very important thing is Garner versus Murray. Garner versus Murray rule. So remember this, if any partner is insolvent, then you have to check. Just being insolvent is not enough. Insolvent means what? The person is not able to pay money. But if he is not able to pay money, but his capital account has credit balance, then no problem, because capital account has credit balance means we have to give money. So if capital account has a debit balance, the partner is insolvent, debit balance means partner has to give money, partner does not have money now. So this debit balance will be borne by, other solvent partners in capital ratio. It will be borne by other solvent partners in capital ratio. This is one thing that you have to remember. And if you have a realization loss, when you have a realization loss, the solvent partners, what will the solvent partners do? They will bring money. They will bring money for their share. For their share of realization loss. These are the key things that you need to keep in mind. So after you finish all this, so what we have to do, if a partner is insolvent, okay, and that partner has debit balance, that's insolvent partner has to bring money, but he's not having any money. So his loss will be borne by other partners in capital ratio. So you need to check their capital. In that ratio, they will bear it. Okay. In case a solvent partner does not have capital, okay, he also has debit balance in his capital account, so he will not bear this loss. Then one more thing what you need to remember is, if there is any solvent partners, and when there are solvent partners, if realization loss is there, the solvent partners will bring money to make good the realization loss. These are the key points you have to remember. Finally, whatever realization account, when it is closed, then only cash account will be remaining in partner's capital account. Check the partner's capital account. Whoever has to get money, they will take it. And whoever has to give money, they'll bring it, because the insolvent partner is already gone. Clear? Okay, journal entries, illustration 9, 4th. So I think you're talking about, whoever has asked me the journal entry part of the doubt, it is about GST. Correct? The GST part. So imagine, I'll just give you an example, try to understand with this. So imagine I make a purchase. Okay, I'm having a purchase of 100 rupees. Let's say the CGST on that is 9 and SGST on that is 9. So total is 118. So what will I do now? Journal entry is new introduction. GST is a new introduction. So what will I do now? I'll pass the entry purchase account debited. My purchase is 100 rupees only. Okay, this GST that I'm paying at the time of purchase, this is called as input GST. Okay, so I'll write input CGST debited 9 and input SGST debited 9. So this becomes total 118 only. To whom? To the creditor, whoever I'm supposed to make the payment to, 118. Clear? This is the journal entry for GST on purchase. So next what happens? If there is a GST in case of sale, imagine I'm selling something 300. Clear? When I'm selling something of 300, let's say CGST on that is at the rate of 9%. Let's say it is 27. Okay, SGST is also 27. So total amount is 354 that I need to pay. Okay, now what I'm going to do, record the sale. Debtor account debited. 354. 2. Sales. Sales is 300. 2. Output. Whatever GST I'm supposed to pay, whatever GST I have collected at the time of sale. This is called as output GST. So output CGST 27 to output SGST 27. So this will be your journal entry. Okay, now what has to happen? These same things, they're also testing you in final accounts also. Okay, now see what happened. There is 27 and 27 that I have collected from my customer, which I need to pay to government. But already I have paid 9 and 9 at the time of my purchase itself. So out of 27, 9 is already paid at the time of purchase. So what will I do? Only the balance will be paid. Now you can see over here, output CGST, output CGST debited 27. I need to pay 27. Output SGST debited 27. I need to pay 27, but already I have paid 9 at the time of purchase. So what will I do? I'll adjust that. 2. Input CGST 9. 2. Input SGST 9. So now you can see out of 27, 9 and 9 is paid. So balance has to be paid now in cash. So to cash account 18 plus 18, 36 will be paid in cash. Okay. One more thing that you need to remember, this same thing can be tested in your final accounts also. There is a problem. I can see some others asking the doubt about that also. So imagine your trial balance is given in final accounts problem and they tell input CGST 18, input SGST. This is a different example 18 and they tell output CGST 27 and they tell output SGST 27. Such problems are there in your final accounts towards the end. Okay. Now what happens over here? This will get adjusted. This will get adjusted. So can you see? Still you have to pay. Out of 27, 18 is adjusted. Out of 27, 18 is adjusted. So 9 has to be paid. So what you will do when you prepare your balance sheet, output SGST, you will show over here output CGST 27 minus 18, 9. And you will also show output SGST 9. If it was the other way around, if the input was more and output was less, you would have shown the input net amount on the asset side. Okay, I think it should be enough. Let me know if you have any more doubts. Piecemeal distribution. Okay, quickly, I'm just explaining what is piecemeal distribution. As the name suggests, piecemeal distribution means eating the meal piece by piece. So you have to pay some when you're dissolution, when it's the case of dissolution, you can't sell all the assets at once. There might be a situation that you're selling the assets part by part, piece by piece. Some assets are sold. Okay, as you get the money, you'll keep distributing. First, you'll pay all the outsiders. All other liabilities are settled. Finally, you have to pay partners. Let's assume you have partners A, B, and C, and you are following maximum loss method. If you're following maximum loss method, what you do, let's assume there is 100, 200, and 300. So your total, what you're supposed to pay to partner is 600. Right now, you have to pay 600. If you're following maximum loss method, imagine you got an installment. Okay, in your installment, you got only 200 rupees. You got 200 rupees. Is it sufficient to clear all the partners? No. So what you will do at this point of time, you are supposed to pay them 600, but you got only 200. So at this point of time, you will calculate your maximum loss. Okay, 600 I'm supposed to pay, 200 I have right now, 400 is my loss. This loss I will distribute to the partners in their profit sharing ratio. If at all any partners balance after distributing goes into loss, negative, same Ghana versus More, what we just discussed some 5 minutes back, we are going to apply that. So now whatever resultant figure is there, this is the amount that is going to be paid. This is the amount that you're going to pay to the partners. Once you pay that, okay, then you check. I was supposed to pay 100, I paid something. I was supposed to pay 200, I paid something. Some balance will be there. This will be your balance payable. Continue like that. As many number of installments you have, keep continuing. Next installment, again, you calculate maximum loss, distribute that remaining amount will be the amount paid. The other method that you have is higher relative capital method. Higher relative capital method. What will you do over here? A, B, C. Okay, you have their capital balance. Let's say again, same thing, 100, 200, 300. You will divide it by their profit sharing ratio. Let's assume profit sharing ratio is equal. 1:1:1. Just divide 1, 1, 1. You will get 100, 200, and 300. So what you can see, higher relative capital means whoever has higher capital, that person has to be paid first. Can you see everybody's profit sharing ratio is equal here, but still C is having 300. So what you will do first? First you will pay the extra amount to C. Extra 100 you will pay to C. Now C's balance is 200, B's balance is 200, and A's balance is 100. So what you will do? You can see still B and C have extra money. So now you will pay B and C 100, 100. Now all three are on the same page. Can you see higher relative capital method means whoever has higher capital, pay that first, settle that first, then you distribute the whatever amount you get distributed in profit sharing ratio. Okay, I guess it's done. Let's go further. Guys, incomplete records, I can't explain that chapter to you. Okay. Only doubt clearing we can do right now. Can you please explain bills of exchange and promissory notes? Practical question 3. Bills of exchange, which point? 9, illustration 9, sixth point. Okay, accommodation of bill. Illustration 9. Sixth point. I am guessing you're talking about the journal entry. Okay, illustration 9, what we can do? Promising illustration 10, how to do the calculation of the amount remitting to Y and amount discounted, last deficiency. Okay, this is accommodation situation. Accommodation situation, that means there is no business relationship before this. One person draws a bill on the other person and they just share the amount. Remember this, first a bill will be drawn. Whatever bill is drawn, okay, whatever bill is drawn, that will be discounted. Once it is discounted, it is going to be shared. Whoever two parties are there, it is going to be shared. Now, in what ratio you have shared this? What ratio you have shared this? Go and apply the same ratio for the discounting charges also. In what ratio you share the money? In the same ratio, the discounting charges are also going to be shared. Clear? When you share the discounting charges, then wait for the date of the bill. On the date of the bill, if one person is not able to pay, then the other person will draw a bill on this guy and he will discount it. Now, if you have a second bill introduced in the same case, remember this, whatever discounting charges are there in this bill, it will be shared in the same ratio in which the original amount was shared. So first bill amount, in what ratio you have shared that, same ratio you will apply for the second bill's discounting charges also. Okay, apply that to that question. I hope it's clear. Guys, incomplete records. You are asking me the entire chapter to be explained now. It's not possible. You have to ask me directly what the doubt is, which problem, what doubt, or which concept. Just the concept I can explain. Okay, illustration 8 of incomplete records. A lot of people are asking that. Let's go to that. In incomplete records, what you need to do is first you cannot do incomplete records before you do bills of exchange, because a lot of concepts of bills of exchange will be applied in incomplete records. So first go and do bills of exchange. Okay, get yourself thorough over there, then come to incomplete records. And even final accounts, you can't skip and come to incomplete records. I hope you're not doing that. I think there is a lag. Okay, we'll clear other doubts. We'll come to incomplete records in a while. can you give me a summary of redemption of debentures? Okay. Redemption of debentures. Okay, it means paying the money back to the debenture holders. If you're paying money back to the debenture holders, just remember this. One, you can pay them in lump sum. That means when the time period gets over, entire amount can be paid at once. Another, it can be paid in installments. During the life of the debentures, you pay part by part in installments. Then you can pay by open market. This is not there in your syllabus. And then finally, you can also have conversion. That means debenture can be converted into shares. Now, there are a couple of questions or couple of topics that you need to remember. DRR, debenture redemption reserve. This is not applicable to listed companies, and even in unlisted companies, this is not applicable to banking companies and NBFCs, All India Financial Institutions, and Housing Financial Corporation. So in the question only, they will tell in bracket unlisted company other than banking company, NBFC, HFC, etc. They'll tell that in the question itself in the bracket. So DRR is 10% of outstanding debentures. 10% of outstanding debentures, you have to create DRR. Okay, DRR has to be there. That means you will remove it from P&L account, debit it, and you'll create a DRR. First, you have to have this check this whether it is 10%. If it is not, you have to make it 10%. Okay, then what happens? DRR investment. Next thing is DRR investment. 15% of your debentures which are redeeming or which are due during this year, you have to have it in DRR investment. Check this also. There will be one DRR investment given in the question. Check if it is 15%. If it is not 15%, you have to make it 15%. That means you have to invest more money and bring it up to 15%. Then the debentures when it's due. Okay, what is the entry for debentures due? You have to pay the debenture holders. So debentures account debited to debenture holders account. If you're paying at face value. What if you're paying at premium? Then you will pass the entry debentures account debited. This will be at face value. Okay, if you're paying extra, that is a loss. So premium on redemption of debentures debited. This is the extra portion that you're paying to debenture holders account. When you're paying the debenture holders, the entry will be debenture holder debited to bank account. Okay, this should be it. And premium will be transferred to P&L. You'll remove it from P&L. Okay, this should be the briefing of debentures. Just be careful with DRR and DRR investment. When you are redeeming the debenture, finally the debenture redemption reserve investment will be sold. So what will be the entry? Bank account debited to DRR investment. You will sell the debentures. And here, ultimately, DRR is also not required. Once the debentures are redeemed, DRR is not required. So you'll remove DRR account debited to general reserve. This should be the briefing. I hope it's clear. Can you explain how to calculate capital reserve in illustration 14 and 15 in unit 2 of company accounts? Okay, capital reserve in C. I will tell you in briefing this capital reserve part. Capital reserve in company accounts. You need to go and apply this logic into your problems, okay? Capital reserve in company accounts is created in one case. That is, if shares are forfeited, and then they are reissued. Shares are forfeited and then they are reissued. Even after reissuing, if there is some balance remaining in share forfeiture account, that will go to capital reserve. Now, I think the questions that you're asking, it's about, see, if at all Ram and Sham, two people are there. Ram's 100 shares are forfeited, Sham's 200 shares are forfeited. Ram had already paid application amount of 2 rupees. So I have 200 rupees, which I'm not going to give back. Sham had paid application and allotment, so 5 rupees. So I have 1000 rupees, which I'm not going to give back to Sham. Imagine the shares are reissued. Okay, those questions where they are little tricky. What they do, they tell, let's see now, 100 plus 200. 300 shares are forfeited. So they will tell in the question, 250 shares are reissued. 250 shares are reissued, which is including all of Ram's shares. All of Ram's shares are reissued. 250 shares are reissued. So what will you do now when 250 shares are reissued? Out of this, it's all reissued. Let's assume 250 shares are reissued at rupees 9. At rupees 9, it is reissued. So here I am making 1 rupee loss. Here I made 2 rupees profit. So 200 into 1 rupee. So 200 rupees will go to capital reserve. Why 1? I made 1 rupee loss. Here I made 2 rupees profit. Net profit is 1 rupee there. It will go to capital reserve. Here I made 5 rupees profit. I made 1 rupee loss over here. 5 rupees profit for the Sham shares and 1 rupee loss when I reissued that. So 4 rupees is the profit. But did I reissue all of Sham shares? No. Only shares which are forfeited and reissued. After that, if there is some balance, transfer it to capital reserve. So 200 shares are forfeited, Sham. But out of that, we have reissued only 150. Oh, I think, sorry, this is not 200, this is 100. Ram shares are only 100, no? 100. 100 shares of Ram into 100. Okay, 150 shares of Sham is reissued. 150 into 4. So this is 600. That will also go to capital reserve. This is the tricky part of that part, that those two questions which you are asking me. There are two people whose shares are forfeited. Now you have to see how much is there in the forfeiture account when we forfeited the shares. Then how much is the loss when we reissued those shares. After that, if there is a balance, that will go to capital reserve. That should be it. I don't know that I will pass or not. Do not think negative now. You will pass. Go to the exam with the mentality that you will pass only. Okay, just think positive, stay calm. This is not the time to think negative. You have 1 day left. You will pass. Think that you are going to pass and go to the exam. Please explain inventory. What in inventory, guys? Everything, I can't give you summary, no. Okay, inventory. Just remember, it has to be valued at cost or NRV, whichever is less. There are two types of problems that you can get in inventory. One is to prepare the table, okay, where they will tell you do it under FIFO or do it under weighted average method. Okay, here there will be a date column. Okay, whatever purchases are there, issues, and finally balance. The balance will be dependent on what method you're following. If you're following FIFO, first in, first out, whatever you purchase first, that will be issued first. So what will remain last? Whatever came last will remain. So issues also, they will not tell the price. You have to see your purchases. If you're following FIFO method, take it in that order. Okay. Weighted average method, what you're going to do, everything will be issued at weighted average price. Weighted average price is basically your total value. Total value is whatever you have in your stock, that into price divided by total quantity. When you do this, you'll get your weighted average price. Issues will be at weighted average price. Closing balance also will be at weighted average price. One type of problem. Another type of problem, what they will tell you is closing stock was counted on 9th of April. 9th of April. Now they want you to find the closing stock on 31st of March. These are one of the problems that are frequently asked. So what will you do? 9th of April, you counted the closing stock little later. So whatever has happened between 1st and 9th, okay, whatever transactions have happened between 1st and 9th. Imagine you have sold, that means goods have gone out, bring it back. Imagine you have purchased, that means goods have come in, remove it. That time you'll go in the reverse order and you'll reach this. Okay, these are the two kinds of problems which you need to see. Redemption, sir. Sir, explain redemption of debentures. I just did that. Guys, I just did that 5 minutes back. What is the most important theory part? See all those concepts, prudence, conservatism, all those concepts you read and go. Capital and revenue expenditure, study that. Okay, all the theory, just important things, which is all the concepts, entity concept, matching concept, all those concepts are there, no, read that. Everything is important, by the way, but last moment you can revise those things. Can you explain bills of exchange? We'll do that. Incomplete records. Many people have been asking. Give me a second. What is important in chapter 2? Important in chapter 2. If I have to tell you what is important, everything is important because rectification of errors is the most important thing over there. But what happens is if you have not done the previous parts, other than rectification, those ledger, journal, subsidiary books, trial balance, all those things, if you have not done, you will not be able to rectify some of the errors because you need to know how it is, what is the process of accounting. Once you know that, then you will be able, you will be in a better position. Okay, don't skip that chapter at any cost. Rectification of errors can appear in the exam for around 10 marks. Don't miss that as well. One second, guys, we'll just get that incomplete records question. Any simple method to understand depreciation question? Okay, guys. Yeah, incomplete records. I'll try to give you a briefing on that. Incomplete records. So in company accounts, which type of sum can be asked? One old, another new. They can ask you from the old questions, whatever are there. That is normal thing. Shares are issued. There can be a pro rata system there. Pro rata analysis you have to do. Okay, because there might be over subscription, and those type of questions can be asked. Share issue, pro rata, share forfeiture, reissue. Okay, that kind of questions can be asked from the older type of, I mean, what was already there in the old scheme also. Or they can ask you redemption of preference share, possible. They can club a question and ask redemption of preference share, bonus share. Together, they can ask one question for 10 marks. Okay, anything is possible, guys. We can't do predictions. Incomplete records, quickly, I'm just going to brief. The ledgers that you're supposed to prepare over here, debtors account, creditors account, okay, bills receivable account, bills payable account, then finally cash account. Sometimes cash and bank are given together, sometimes they are given separate. When ledgers are given separate, prepare them separately. There is a reason why they have given it separately. Now, usually debtors account is prepared so that you can find the sales. What sales will you find over here? Credit sales. Credit sale might be missing. Some questions are there where the opening balance of debtor only is missing. If opening balance of debtor is missing, what's going to happen? The debtor opening balance will impact your opening statement of affairs. Statement of affairs opening means what? That is the opening balance sheet. What are we going to do in the opening balance sheet? In the opening balance sheet, we prepare this just to find our capital fund or capital. What is the opening capital? Find this because we will need this for the closing balance sheet. So now debtors, main thing is debtors to find credit sale. Once you find credit sale, add credit sale and cash sale. That will be your total sales for your trading account. Clear? Bills receivable account. Also, there might be things missing. Sometimes what happens? Everything is given. One thing is missing. That is bill which is dishonored. The bill dishonored amount, what is there over here in bills receivable account, that will impact the debtor account. Because without closing this, you can't close the debtor account because there might be something like bills dishonored which will impact your debtors account. Once you close that, you get the debtors account balance, then you can close it. Same thing with bills payable. There might be something linked to bills creditors account which is linked. So once you close bills payable account, then you'll get your creditors account. Now cash and bank account, multiple things can go missing. In cash account, the cash sale can be the missing figure. Once you get cash sale over here, you have the credit sale in debtors account, club both of them. That will be your total sales. Bank account, things can go missing. There is a question in your incomplete records where in the bank account, they have told building which is missing. 4 lakh something building amount is there. Okay, they have told that building purchases were made, but other expenses we have not kept record. So whatever missing figure here was the building amount, that building will go to closing balance sheet. Okay, all these things are there. There is also a situation that you have to use your inventory formula in incomplete records. That is cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. There are questions where closing stock is missing. Use this formula, you'll get the closing stock. There are questions where opening stock is missing. Then use this formula, you'll get the opening stock. Put the opening stock to your opening statement of affairs so that you can get your capital missing figure. Okay, now how to find cost of goods sold in another way? You can do sales minus gross profit percentage. When you get this, you get this. That time some other missing figure you can find out. Clear? That's the briefing I can give you right now. Journal entry starting illustration 1 and 2. Guys, journal entries we have discussed like five minutes back. GST part, have a look. Sir, how to find these things should do physical verification adjustments. Physical verification adjustments, whatever things have gone out between the balance sheet date and the 9th of April or 10th of April, whatever it is there, whatever has gone out. That means if you have sold goods have gone out, bring it back, take it at cost. But when you bring it back, take it at cost. Whatever goods have come in, okay, remove that because you want to go backwards in time. Explain depreciation. Okay, guys, the depreciation part. You have two types of problems that can be asked here also. First, when depreciation is deducted from asset, that means you pass this entry, depreciation account debited to asset account. Another method where depreciation you create provision, so you pass this entry, depreciation debited to provision for depreciation, depreciation debited to provision for depreciation. These are two kinds of problems that can be asked. So if there is provision for depreciation, what happens is when there is a sale or that time you have to prepare one more ledger called as disposal account. Disposal account. Here what happens? Okay, asset will be, if at all you have provision for depreciation, asset is maintained at cost. Provision will be there. I mean, depreciation will be kept separately in provision for depreciation account. So when an asset is sold, the cost you bring over here. So you will write to asset. This will be the cost portion. Then entire provision that is there on that particular asset, you bring it over here by provision for depreciation. This is the total depreciation on the asset sold. Total depreciation on asset which is sold. Then when you get money, bank account debited to disposal account, put the amount over here. Okay, profit will be credited to P&L. So you'll write to P&L. If it is loss, you will write by P&L. Okay. This much we can go through. Sir, in BRS, am I unable to find in whose point of view I should make BRS? They will tell in the question at the starting only that balance as per cash book, OD balance as per cash book. Take that as the starting point and then continue. Take that as your starting point. Whatever, some starting point will be given in the question. There might be questions where there are adjusted cash book to be prepared. Adjusted cash book makes your BRS smaller. So what happens? Whatever mistakes are there, two things. You have done some mistake in your cash book or you have not entered certain things in your cash book. This is under your control. What you can do, go to the cash book, make the changes. Okay, repair your cash book. Then you go ahead and do the BRS. But whatever mistakes are done in the passbook, that means done by bank, or whatever things are not entered in the passbook, that is not done by the bank. These things you can't correct. Okay, those things will go to BRS. So when you have adjusted cash book, first you rectify the things and put the things which you have not put already into the cash book. Then you go ahead and prepare your BRS. Bills of exchange, third practical question. Many people are asking for that. Let's check it out. Bills of exchange, we'll see what is the third practical question. At least 4 to 5 people are asking that from that time. Third practical question. Oh, journalize the following in the books of Dawn. Okay, Bob informs Don that Ray's acceptance of 3,000 has been dishonored and noting charges of 40. Bob accepts 1,000 as cash and balance as bill at 3 months, interest at 10%. Don accepts from Ray his acceptance at 2 months. This is basically like in the illustrations, there is one Katrak. Katrak's question is there. Okay, it is same as that. Let's go directly into the solutions and try to discuss that from there. See, first thing, Ray to Bob. Why Ray to Bob? You can see the question over here. Bob informs Don. Everything you're doing in the books of Don. You're doing in the books of Don. So you think that you're only Don. Okay, Bob informs Don that Ray's acceptance of 3,000 has been dishonored. That means you're Don. You are Don over here. What you had done? Okay, Ray had given you. Who is Ray? Someone who had given you one bill. Okay, this bill you had passed it on to Bob. You had passed it on to Bob. That means you had endorsed this bill to Bob. So for you, it was bills receivable, which has gone to Bob. Now, what has Bob done? Bob has not paid Ray on time. Bob was supposed to pay Ray, but Bob has not done. So what will happen now? Bob is supposed to pay. So can you see the entry over here? Okay. Sorry, Ray is supposed to pay. So Ray's account debited because Ray is the person who is supposed to pay you now to Bob. It is not 3,000, 3,000 plus 40. 3,000 plus 40 because 40 rupees noting charges is also incurred. Okay, you can have a look. Bob informs that Ray's acceptance. Ray has not made the payment. So Ray has to make payment. So Ray will become a debtor. Bob, you were supposed to pay. Bob didn't get the money. So Bob will become the creditor. Bob accepts 1,000 rupees in cash and balance as bill at 3 months interest. Okay, what you have done now? You said, Bob, I can't pay you now fully. Okay, I'll give you 1,000 rupees in cash. So 3,040 I was supposed to pay to Bob. I'm going to pay extra because interest. Bob is not ready to agree for the same old amount. So I'm going to pay interest at the rate of 10% for 3 months. That is 51. Interest is an expense to me. Okay, to cash. Why to cash? Because I have paid 1,000. Whatever balance amount is there, everything will go into the new bill. New bill which I'm supposed to pay. Clear? Now, this is for Bob. What will I do with Ray? Ray is the person who was supposed to pay me money, no? What will I do with Ray? Don accepts from Ray his acceptance at 2 months plus interest. Ray told, give me also 2 months time. I am not able to pay money. So give me 2 months time. So can you see when new bill comes into picture, bills receivable account debited to Ray 3,040. What you were supposed to pay me was 3,040 from this entry. Can you see over here? Not here. Here. Can you see this? From here, you were supposed to pay me 3,040. Now what has happened? That 3,040 you are going to pay. I mean, Ray will pay. Plus, he's also agreed to give interest. Interest at the rate of 12%. Compute it for 2 months. You will get 60.8. That will be the new bill amount. Okay, that is the first thing. Now go into the second one. Second one, James owes Don 3,200. You are Don. You are Don. Okay. He sends Don's own acceptance in favor of Ralph for 3,160 in full settlement. James had to give you money. Okay, and you're Don. Don, you had given one bills payable to somebody. You had accepted somebody else's bill. So bills payable. That same thing he gave it back to you. So this will become bills payable to bills receivable. You can see that entry over here. Where did it go? Yeah, here it is. So bills payable account debited 3,160 to James. Okay. And over here, can you see 40 rupees is discount? Why? I was supposed to pay 3,200 to James. What James did, my own bills payable, he gave it, endorsed it back to me. So now 3,160 went out. I was supposed to pay 3,200. 40 rupees is my discount. Okay, 40 rupees is a discount. What is a discount? Discount allowed. Okay. This is the cancellation entry. I hope it's clear. James owes Don. Okay, James is supposed to give me money. I am Don. Again, James is supposed to give me money 3,200. And as Don, I had given one bills payable to Ralph. I had given one bills payable to Ralph. This was 3,160. So now this same thing came back to me. Maybe Ralph had given it to James and James gave that same thing back to me. So now what happened? Bills payable is gone. But this is only 3,160. I was supposed to get 3,200. 40 rupees is discount. Don meets his acceptance in favor of Singh for 4,500 by endorsing John's acceptance of 4,450 in full settlement. Now understand this. You're Don. Okay, Don meets his acceptance. That means you had given one bills payable to Singh, which is 4,500 by endorsing John's acceptance for 4,450. There was one person, John. Okay, John had accepted one bill and he had given you one bill for 4450. This is bills receivable to you and this is bills payable. By endorsing John's acceptance in full settlement. So what's happening? There is one bills payable, there is one bills receivable. Okay, just have a look at that. Those two are going to get adjusted. Bills payable was 4500 gone. Bills receivable, what is there is 4450. So there is a 50 rupees shortage over here. This is discount received because I was supposed to pay 4500, but I paid only 4450. Bills receivable only 4450. 50 rupees is discount. Clear? The last adjustment there. Raise acceptance in favor of Don. Retired 1 month before due date. Interest. Okay, this is just a retirement situation. I don't think there should be a problem here. Raise acceptance. That means Ray had accepted one bill. For me, it is bills receivable. Can you see bank account debited? Discount can also be taken as rebate. Rebate account debited. Okay, 1 month before they have given the amount, bills receivable is gone. This is a normal rebate situation. I don't think there should be any issue. These two are crucial. Have a look at it again before going to the exam. NPO important. What kind of questions can we expect from company accounts? Guys, no predictions, no predictions. Please explain practical question of bills of exchange. I think we have done that. Okay, NPO, just a quick briefing. You can have income and expenditure account and balance sheet asked in the exam, one combo. Okay, receipt and payment account plus balance sheet given. Okay, another combo. Here, very, very important thing is your understanding of outstanding, prepaid, outstanding expense, prepaid expense, income accrued. Subscription is one of the major incomes. Income accrued, income received in advance. Income received in advance. I hope you know by now. Outstanding expense is a liability. Prepaid expense is an asset. Income accrued is asset. You have to get money. It's always asset. Income received in advance. You receive the money early. It's a liability. Okay. Now, quickly, I can just tell you one thing. Income and expenditure account is like P&L. Is like P&L. Same thing. That means you are going to follow entity concept. Sorry, you are going to follow periodicity concept. Whatever is related to the year, only you will put it in income and expenditure account. So if something is related to last year, you will remove it. If something is related to next year, you will remove it. Only related to a particular year, you will keep it in income and expenditure account. Receipt and payment account. One more thing in income and expenditure account, only revenue items. Only revenue items. If you have purchased one fixed asset and all, it will not go to income and expenditure account. Clear? When we go to receipt and payment account is like cash book. It's like a cash book. In receipt and payment account, what happens? When you're telling it's like cash book, all things, all cash transactions will be there in receipt and payment account. Okay. Here, don't bother about which year. Whichever year, if amount is paid or received, it will be there in the receipt and payment account. Okay. And whether it is revenue or it is capital, it will be there in the receipt and payment account. So what you have to remember, when you're preparing receipt and payment account, you follow cash concept. Did I get money? Yes, I'll put it into receipt and payment account. Is it last year's? Doesn't matter. Is it this year's? Doesn't matter. Is it next year's? Doesn't matter. Whichever year related, you got money, you paid money, you will put it into receipt and payment account. One more thing, revenue capital concept is not there when you're putting things into receipt and payment account. Is it some capital expenditure? Still you have paid, it will go through receipt and payment account. If it is a capital receipt, still it will go into receipt and payment account. Be careful with these things in NPO. Yes, guys, anything else? I think I've run out of all the doubts, guys. Any other doubts? You need to let me know. Capital reserve realized in cash can be used for bonus issue. Yes. But what you do, remember this. Okay. your bonus issue part, go in a particular order. Okay, bonus issue, whenever you are having bonus issue situation, CRR you utilize first. Okay, securities premium you utilize next, general reserve, and then P&L. Use in this order. Capital reserve realized in cash can be used, yes. But you utilize this, go in this order itself. Only if you have a shortage, then think about it. It will be given in the question itself. It is realized in cash in bracket. Guys. Okay, yeah, a lot of people are asking that incomplete record situation. Let's quickly try to resolve that. Give me a minute. Okay, let's get back. I think the most of you have asked the ninth question from incomplete records, 8 and 9. Okay, let's try to quickly go through that 8 and 9 question from incomplete records. I think it should be here. We will go with the question number 8 first. Question number 8. See, Adam G keeps his books on single entry basis. The analysis of the cash book for the year is given. Okay, and they have given the receipts and payments. Receipts and payments both are listed down. You can see payment to creditors, all that things. Particulars of assets and liabilities. All the opening balances and closing balances are there. We have debtors, creditors, machinery, furniture, inventory, investments. All the things are there. There is no bills receivable as far as there is no bills receivable in this question. So trading account, P&L account, balance sheet is the last thing. So what you're going to do first opening balance sheet. What are you going to get? Where are you going to get all these numbers from that table? Can you see that table over here? All the opening balances are there, sundry debtors, sundry creditors, everything you will put it over here. Okay, into the opening balance sheet. Everything you'll enter into the opening balance sheet straight away. Clear? Then I think one thing is not there in this table. What is not there in this table? The cash balance. Can you see balance, bank balance on 1st April? That is there over here. This will go into opening balance sheet. And there is bank and cash over here. This will go into closing balance sheet. Closing balance sheet. Clear? Now, when you do all that, the only missing figure over here in this balance sheet is this capital. This is the opening capital which you need to know. Clear? Now, after that, Adam G's capital account and all they have prepared. Now see sales account, debtors account. When you prepare debtors account, now automatically you will get the credit sales. Debtors account, I told you, the one missing figure that you can find out from debtors account, very commonly asked, is the credit sales. You got the credit sales over here. See over here, creditors account. When you enter everything into creditors account, what can be there in creditors account and debtors account? Opening balance, closing balance, credit sales, amount received from debtors, discount allowed to debtors, bad debts, all those things are the ones which are sales return. All these are the ones which will affect the debtors account. Creditors account, what will impact? Opening balance, closing balance. Then the purchases, what we have made, only credit purchases, amount paid to creditors, discount received from creditors, purchase returns. Okay, all these will be there. If there are bills payable, if there is a bills payable which is accepted, that will also impact. Bills payable which is dishonored, that will also impact. So all these things you have to see when we are preparing debtors and creditors. So you can see over here the missing figure is the purchases. Missing figure is purchases. Okay, now can you see over here what they have done in this question? You can see opening inventory is given, purchases we found out, sales we found out, closing inventory is given, then gross profit. So why are they preparing this capital account over here? Okay, to find, they have simply prepared a capital account. You can do this calculation. What will be their opening capital, which we found out from opening balance sheet, which we prepared, plus net profit. This you are getting from your P&L when you conclude your P&L. Okay, additional capital introduced, 6,000. Where are we getting this from? From the question, they have told additional capital introduced. See, capital brought during the year, 6,000. That will be added to capital. That will be added to capital. Okay. And then, one second, where did it go? Yeah. I think there is an issue. Yes. Drawings, 3,600. This also from the question itself. Now, what we will do, understand this. Received from debtors. This will impact received from debtors. This will impact your debtors account and your cash and bank account. So what is the entry for received from debtors? Cash and bank account debited to debtors account. Cash sales, cash account debited to sales account. So it will impact your cash account. Capital brought in, cash and bank account debited to your capital. So you are adding it to capital. Interest on investment. Interest on investment. What will you do? Again, it is impacting your cash account to P&L as income. Sales will go to trading account as sales, obviously. So cash sale, credit sale, both when you add, you have only cash sale, no, over here. Credit sale you will get when you balance the debtors account. There you will get the credit sale. Okay, and the payments you can see over here, payment to creditors. Put it into the creditors account. In the creditors, the missing figure will be your credit purchase. When you get credit purchase, cash purchase, you add it. Okay, there is already cash purchase given over here. Cash purchase plus credit purchase, put the total purchases into your trading account. Salaries will go to your P&L. General expense will go to your P&L. Rent and taxes will go to your P&L. Drawings, what you will do, subtract it from capital. Okay, all these things when you do, you'll be able to prepare your trading P&L and balance sheet. Okay. I think 9th question also people have been asking continuously. Let's see what is there in that. Following data furnished by Manoj. Okay, to prepare trading P&L and balance sheet. You can see over here. In this question, no, till here is the detail of 2 years. Till here, the details of 2 years is given. Okay. In this, can you see already opening balance of debtor is missing? Opening balance of debtor is missing. So what we have to do, we have to find all the other things in the debtor's ledger so that the opening balance is a missing figure. Okay. That will be the balancing figure. Details during the year. Can you see cash and discount to debtors together? They told, but don't worry, somewhere below they have told. Yes. Cash and discount. See, discount allowed to trade creditors. Here they told cash and discount allowed to trade creditors. That means here cash what we have received is 63,300 and the discount part is 700. Discount part is 700. Then you have sales return. What will happen to sales return? It will get reduced from the debtors account. Okay, bad debts also it will get reduced. Bad debts account debited to debtors, sales return to debtors. Two things. Sales you have cash and credit. Cash and credit sales they have given. So you have to bifurcate this. You have to bifurcate this. I think when you prepare your cash account, you'll get a missing figure there. That will be your cash sale. Once you get the cash sale, the balancing figure in the cash account in this question will be the cash sale. Once you get the cash sale, the differential amount will be your credit sale. This is 71,810 minus cash sale will be your credit sale. Clear? Where will you get the cash sale? Go and prepare. Okay, cash purchase is given, but cash sale is not given in this question. So when you prepare cash account only, you'll get the missing figure. That is your cash sale. Okay, I can just quickly show it to you. See over here. Everything is entered into cash account. The missing figure is the sales. When you put this sales, see in debtors, when you put this sales and subtract it, missing figure is credit sale. When you put everything, then the missing figure is opening balance. Okay, here you can't tell that missing figure will be my credit sale. Credit sale you have to find. How are you going to find? See, first find cash sale by putting everything into your cash account. Cash and bank together you do it. Okay, then the missing figure you insert it over here. Total sales was given. Total sales minus cash sale will give you your credit sales. Okay, now the balancing figure. Balancing figure will be your opening balance. Clear? Discount is also given. All these things. In creditors account, there is no problem actually. Creditors account, everything is given. Okay. This is the balancing figure. You can see creditors. There also there was an issue. Okay. 12,400. Everything is given. Just put the numbers there. Now, another thing, what we have to worry about in this question is see. Opening inventory given. Purchases. We have the cash purchases and credit purchases. Cash purchases, it was given to us. Credit purchases, what we are going to do? We are going to find it from the creditors ledger. Then finally, sales also, both of them we have found out. Then returns you subtract and closing inventory is given directly. You will get your gross profit. P&L, hardly anything is there in your P&L. Sundry expenses is one thing that you have to be careful about. Okay. Why sundry expenses you have to be careful? Because there is outstanding. What will you do? Last year's outstanding, you will subtract. This year's outstanding, you will add. You are preparing P&L. Last year's outstanding is last year's expense, so remove it. This year's outstanding, not received, but you follow accrual concept, add that. That time you will get your sundry expenses. Okay, that's why there is this working note given over here. Rest of the things are all general items in your P&L. Balance sheet also, be careful. Net profit you have to add, less drawings. This you already know. I don't think there is any other complication in this question. That should be it, guys. Yes, see, adding outstanding, removing outstanding, all that they have done. That should be it. Use CR in cash for securities premium. Yes, capital reserve in cash after securities premium can be used only if it is mentioned in the question. Yes, you can do that. Will there be MCQ in exam, sir, for accounts? Possible, guys. No predictions. It's possible. Just prepare, just study everything and go. However they ask, you'll be able to answer. Doesn't matter. Inventories practical question 4. I think we just did it that time. That should be it. Guys, any other doubts? That is it. Now, don't make any predictions. Just go to the exam. Okay, wish you all the best. Don't worry about what is going to be asked. Last moment, don't go to make any predictions. Whatever you have studied, your strong areas, just revise those only. Okay, don't go to listen to others and start studying something new or depend on somebody else's predictions. Don't do that. Just whatever you have studied, your strong areas, revise it. Go with a calm head to the exam. Okay. And someone was asking me just now, there is a question here. Getting scared whether I'll pass or fail. No fail. Don't think about fail at all. Okay. Don't even think that there is a September attempt. There is no September attempt. There is no more attempt. Just think that this is the attempt. That's it. June is the attempt. You will pass. What you need to think of next is not CA foundation. You need to think of CA inter attempt. Just think, when is my CA inter attempt? When am I going to attend classes for CA inter? Just focus on passing. Don't think negative when going to the exam. Think that you're going to clear only. Okay. Think that you're going to clear. Don't worry about anything else. Okay, yes, guys, that's it with this doubt clearing session. Wish you all the best. Okay, I'll pray that all of you will come out with the flying colors. I'm 100% sure. Just go to the exam with a calm head. That's it. Yes, guys, thank you. All the best. Live class timing. There is no live class timing now. After exams, we'll discuss all that. Right now, there is no foundation class where it's going, where I'm taking right now. Yes, guys, see you. All the best.